we've got a lot of guests here today, and we've got some CPAs, some financial insurance professionals, and many people from everyday walk of life. And that's why I tell you, I'm just glad everybody was able to get here today. And we're live across the country, and just want to take a few minutes and get started here. And we're going to have a great, informative 45 minutes plus here. We're going to knock this thing out of the ballpark. A little bit about myself. I've been in the financial services industry 33 plus years. I was considered a pioneer in the living benefits movement in the United States. For those in the insurance field, you understand that. Those that are CPAs, attorneys in the room probably have no clue what we're talking about, but was a pioneer. Top-notch producer, produced as much as $1.4 million in production of my own pen. The Blue Cross Company families, the merger, Healthcare Service Corporation in 2001, which was Texas, New Mexico, and Illinois Blues families, recognized me and my agency in not some sales magazine, but actually the annual report. We really did a great job with them. I was asked to be a participant in the first worldwide conference on critical illness insurance in the United States back in 2003, the Disney Yacht Club. I was named in 2003 the state chairman for the state of Missouri for the National Business Advisory Board. And I currently occupy the title of President CEO of Global Renaissance, partnership with Freedom Act Group as the CEO. Our history. I've been there since the beginning, folks. Way back in 1991, we started with 8 producers. And in our first year of insurance sales in the United States, we did $1.6 million in life premium. In 1992, we had just exponential growth. We grew by 8,000 reps in the year 1992, and we climbed from 1.6 million to that next year doing over $16 million in premium. The reason we had exponential growth that year was not because of product, but because we introduced what was called a floating management bonus. We sold the agency a handful of years later after recruiting 25,000 plus agents and doing doing over $100 million in commission payouts in a 4.5-year time frame to our field force. We remained captive until 2003. We re-entered the independent distribution system as Freedom Equity Group. And today we're one of the largest financial and insurance marketing organizations in the United States. We were the #1 producing agency for the for the biggest life insurance company in the world last year. And we've led several other companies. We've had so much growth in the last handful of months and weeks. It's just been extraordinary. We've never seen, we're breaking every sales record right now across the board, and you're going to see why today. By February 10th of this year, we have outproduced what we did in all of January. That's just amazing. We did over $17 million in production in 2014. And in 2015, we introduced the hottest life product in the country. This is an exclusive product to just us. It's our product. Our actuary built it. It's the first index life contract with one of the options actually being 100% no cap guarantee for life, with a variable cap for life loan feature at 4.5%. I'm going to tell you, this is game-changing stuff, and it set our agency on fire. But this is about you today. You see, it's more than product. If it was about product, everybody would be singing the same song, but it can't be just about product. You've got to have a model for success. And I got to tell you right now, we've got a model that we love that you're going to see here today. We've got a model for you, the attorneys in the room, that's going to bring business to you. We've got a model for our P&C partners. That's property and casualty agents that are inside the room here today. We've got a model for you, the insurance professional. And what we do for the individual consumer is amazing. The individual consumer probably benefits the most of everybody here in the room today. They benefit because we've solved a lot of things, but we're going to be able to bring that consumer 300% more income at retirement time without having to invest an extra dime. That by itself is amazing. But we've got so much more than just that. People do not save enough money. The biggest crisis in America is we have a demographic of people between 45 and 60 years of age that probably will not be able to retire. And I'm here to tell you right now, how big a deal is it? Well, these are the numbers. If you want to have $5,000 a month of income, and assuming you could get 800% bigger return than you can get at the bank, that's an 8% rate of return with no losses, mind you. If you're 20 years of age, you'd have to save $113 a month. Well, 20-year-olds don't think about putting away $25 a week. They just don't. If you're 30 years of age, the bar went up a little bit, $260 a month. It's not an overwhelming figure. A lot of us save that kind of money. But if you're 40 years of age, that bar went up to $628 a month. That's over $150 a week. Well, a lot of people are not doing that figure. If you're 50 years of age and you're now trying to get your life together for retirement, that bar just went to $1,700 a month. And if you're 60 years of age, it's an embarrassing number because it's a number that I think almost no 6-year-old can deal with. If you're 59, 58, 60 years of age, these are coronary type numbers. They can give you a coronary. It's $8,000+ a month you've got to put away to get a $5,000 a month income stream. Yes, procrastination is a disaster, but we do not save enough money. I'm presenting today, Dare to Dream Again, how to get 300% more income at retirement time and dealing with the facts. And for my guests, my insurance professionals in the room, my professionals from the CPA profession, my attorneys that are here today, what's in it for you? Please stay with us, get educated in our model here today, and at the end, for each and every one of you, you're going to find out what's in it for you today. Give us a little bit of time. We bring dignity back to that demographic. There's 92 million people in this country right now in the United States between 45 and 60 years of age. Some of them have lost a job. Some of them, are in a dysfunctional state. Some are employed, and some have given up trying to find new employment. People are being displaced on a continual basis. This happens across the country. Too many times you put your entire life into a company, and all of a sudden, the next thing you find out is, wow, everything has gone topsy-turvy. How can you keep planning for retirement if they displace you? You know how many 45, 50-year-olds all of a sudden find themselves in a lower paying position at the wrong time in their life? This is wrong. This is the first generation of people in the United States ever that has the entire burden of retirement on their shoulders. Do you know any recent college graduates? Think about the burden for them entering the workforce. This is the first time in the United States kids are going to school, coming out of college, and they're not even getting a job in what they went to school for. Life is throwing so many curves at the current baby boomer generation. And tonight we're going to try and make heads and tails out of it. We're going to try to help bring dignity back to those that want to retire. And I'm going to tell you, it's no picnic how we're going to get there today. But I'm going to tell you, we've got a lot of work to do. Now, what I'm going to do here is I'm going to tell you, very simplistically, it's very, very important that people understand you've got a choice when you come out of college. One of those choices that you have is to get a job, get some benefits, or own a business. It's never too late. And I am not talking about putting a person in a business where they're, in some kind of MLM or multi-level. They need a real, true business opportunity. And today, I can tell you we've got 3,700 investors, from the largest banks in the world to the smallest entities in the United States, to life insurance companies, to mutual fund companies, entities that want to reach out and help you get a footing back in this, to really get a footing back, which means it's time for you to make some changes in your life. This is my business model. I recognize the fact that every 50-year-old, 55-year-old, 60-year-old has got to change the way they look at things, and they need a new career. They need to enhance where they're at and take control of their income, and the only way they can take control of their income is to be in a path of prosperity, is to be a business owner. So tonight you're going to have those options tossed at you. No, we're not talking Amway. No, we're not talking some pie-in-the-sky potions and lotions or cosmetic creams. We're talking about a legitimate business opportunity tonight. Whether I put you in the financial services world or we help put you owning a Subway restaurant. You see, it doesn't have to be David Weiner's dream. I just have to cater to your dreams to make sure you have enough money for prosperity and educate you what you have to do. We help you in this room and our partners obtain a path to business ownership. We know the steps that you have to do in order to get a bank or investor to play ball with you. Getting a bank to say yes is a big deal. Yeah, you have to have a great credit score. Your personal financial house in order, and guess what? In my profession, that's what we do. A resume that makes you a stellar fit for that entity. A stellar marketing plan. You have to learn how to market yourself. And it's got to be done in the new way of doing it, mobile friendly. Not an app, a URL, a real mobile website. You're going to learn about household continuation and business continuation, things that I'm an expert in, I bring to the table. You're going to need an attorney. And if you're doing a startup or a franchise, attorneys are brought in. And for the attorneys in the room, I can't wait for you to understand that in every city across the country, we can actually create for you 10 to 15 new clients a month with our model. For my property and casualty friends in the room, the ability for us to create for you 10 to 15 commercial workman case liability cases, commercial insurance. And for those of you who have a CPA background and bookkeeping background, my new people, this is not H&R Block type stuff. I'm putting people in the business. They're going to need a stellar CPA. We have a proven process. Our potential business owner partner attends a workshop. They go through a one-on-one counseling session with the advisor. And that advisor happens to be a licensed insurance professional. And guess what? They discuss what type of business that person desires. We look at their background. We've got businesses that require zero investment, that pay significant living. And we've got business opportunities that cost millions. We do startups. People come to the table with great ideas. We review, as an advisor, how they're saving money. If they still have a job, maybe they're still working at Ford Motor Company, they're still working some kind of entity. I can tell you this right now, 300% more income without investing another dime is a pretty big deal. And we do that. And we compete against matching funds. Imagine for 1 second in that counseling session that you sat down with a person and they said, yeah, my wife's saving $500 a month and the company matches $500 a month. What if we told you to give up the match and we still had 300% more income? That's a pretty big deal. We don't lose, and you're going to see that today. Do you have to have a good credit score for a loan? Yeah, probably. And for my partners that have the insurance agent background, why would you need a loan? Well, because you own a business. We're going to talk about that at the end, but you're already in business ownership. You've got to learn how to advertise your business. You've got to learn how to fill the workshops that you do. And a line of credit allows you to appropriately spend the right kind of money. There's an entity in Chicago that does workshops right now twice a month, and they do $250,000 a month of a new type of retirement income planning contracts, competing against the 401k type stuff. And they do $250,000 a month. Now, if you were doing $250,000 a month as my guest here today, would you be willing to put 20, 25% back into advertising? Would you put $15,000, $20,000 a month to fill a workshop so you could write $250,000 a month? As you know, my advertisement actually said only $50,000 a month in production, but there are producers in this industry, like myself, that do consistently over $100,000 a month life insurance premium. And for my guests that never fathomed buying a life insurance product and looked at nothing more than an expense and never looked at it as an asset, tonight you're going to see the roles that the insurance industry plays, from protecting your household income to protecting a business entity to guaranteeing your retirement. The insurance industry is one of the biggest financial industries in the world. And by the way, 55% of all the assets controlled in life insurance companies is controlled by the ultra-wealthy in this country. You're going to learn a great deal of secrets that your local advisors don't physically share. And you're going to learn all those things in that process. If we determine that you need a loan and you got a good credit score, we'll apply for it. And guess what? You'll have an answer in a couple of days. If you got bad credit, you know what? There's a lot of people that have had their life disrupted by losing their jobs and being displaced. If you're sitting in this room and you know you've got a horrendous credit score and things are really bad, well, guess what? Do not fret. Hey, it's not going to stop you from getting to where you need to be. We've got a plan even for you. You do not have to have a great credit score to be rescued today. We're going to help you. We're going to show you how to market at a reasonable cost. We're going to show you how to get a commercial done, links to social media. And by the way, social media this past month brought me one case of over $2.8 million in total premiums to go to insurance companies. If you don't use social media in today's world, you've got to learn how to link to it and understand it. And believe me, we've got it down to a science. Business continuation, household continuation. You know, owning a business is stressful. I'm not going to tell you. 8 out of 10 startups fail. And guess what? We've got a plan that the capital source, the bankers and investors, not only do they love our business continuation planning, our household continuation planning, they now stipulate for it. You're going to learn about those things. Getting a banker to say yes, that's something you've got to do. You've got to bring that to the table. So I'm going to start the conversation for my attorneys and for my insurance professionals on business continuation planning. Because let's face it, my attorneys and for those of you here today who have business clients in the thing here, you're going to love the new BCP. The new BCP is going to allow you to bring clients back from your file cabinet back into your office. As you know, business continuation and buy-sell agreements were all funded by traditional life insurance. When loans have been done, bankers have always stipulated you've got to have life insurance to pay off the loan. That's the old stuff. We live in a different world today where you don't have to be in a pine box. Business continuation needs to take care of everything, not just the bank. It needs to take care of you, the business owner. It needs to take care of your employees. And it needs to take care of the capital source without you dying. Now, this is very important stuff. We show you how to get the life insurance money, the death benefit, up front without no death. We have the ability today to release almost $5 million in capital the day you get sick, not die. That's a big deal. What do we do with that money? It's very simple. I need time. I don't know if you're going to survive or not survive. I don't know if you're going to recover enough to go back to work. I need 12 to 18 months to figure out what's going to happen. In the old days, if you had plain Jane life insurance, guess what? You weren't dead. There was no money released. No money released, guess what? Your company, without you, went into a dysfunctional state. The money you took out to pay your personal bills, your household went down the tubes. Your employees were let go. And your spouse had to try and sell the company, which was still in debt with no new revenue. Guess what? Those companies weren't sold. The loans went belly up. The employees that had a secure life working for you suddenly found themselves in a state of dysfunction because you weren't there no more. Business continuation planning means we document what you were doing. Business continuation planning means I had enough money to pay the overhead for 12 to 18 months. In other words, if you got a $50,000 a month overhead business, I need to release $900,000 that day. Not done. That's a starting point. I want enough money released to pay off all the loans and obligations of your company, all your notes due. I want your company debt-free. And by having the overhead covered for the next 18 months, that includes the money that was coming out to pay your household bills. Your household doesn't get destroyed. Your employees still maintain employment. And if we do have to sell the company, it's a lot easier to sell a company debt-free, still functioning, because I left enough money to hire 1 or 2 people to replace what you were doing. And because we documented what you were doing, you could step right into that executive role to run your company. See, that's business continuation planning. That's stellar work. We can finance the premiums. We have a lending portal that you're going to learn about today. A lending portal allowing me to take a $4,000 life insurance premium and package it down inside a loan for $33 a month. It permits us to do what we do best, help your business with state-of-the-art marketing. Household continuation planning is very, very, very important. Most people want you to buy a business and they want you to use all your resources. I don't want you to touch your savings. Listen carefully, folks. I do not want you touching your savings. Your 401k and IRA accounts are sacred. They're nest egg money, not meant to be blown for those of you in this room under the age of 60. If you're living off that money, if you're blowing that money, you realize that saving money is harder than dieting. And I've gone through decades and decades of disaster by trying to diet. I counsel people all the time on saving money. I will not let you blow that savings. In fact, we're going to dummy-proof it. We're going to do a 401k IRA rollover. And I have an insurance company today, the day you bring that money over, it's going to enhance that value by 30%. So if you bring $50,000 to the table, we're going to give you today $15,000 into your income account. What does that mean? That means 30 days from tonight, I can start delivering $2,500 a year of income guaranteed for as long as you breathe. What are we going to do with that money? We're going to be smart. We're going to use the new type of life insurance. And we're going to buy a death benefit of $1.3 million. And if you get sick, something goes wrong inside your household, that insurance company is going to release about $1 million of that death benefit up front. And we're going to buy an annuity. You've now got an exit strategy. It's going to give you a household income by working with me of about $60,000 a year until both of you have passed on. You see, if the stress of that business hits you, if that stress nails you, heart attack, stroke, cancer, I have the ability to release up to 90% of that death benefit up front. And what did I do? It just made sense. See, this is, for me, a crusade. There is a problem in this country. The average age of a claim for a heart attack, stroke, cancer right now in this country isn't 60 or 65 years of age. 84% of the population died last year from heart attacks, strokes, and cancer. I know that. Maybe you didn't. But the average age of a claim is 43, and 52% of the claims are between 41 and 50 years of age. For my business owners and my household practitioners in the room, people that own a home and have a family, think about the 7 out of 10 people under 65 walk away. They don't die. You still need that money. You still need funds. For most Americans, almost 2/3 of us, we go bankrupt. According to Harvard Law, the statistics are real. It's really 62% right now. 62% go bankrupt for medical incapacitation. And The average age of a medical BK is 44, and do not blame health insurance. Almost 8 out of 10 people had adequate health coverage. You've got to basically sit down and say, how am I going to take care of all these things? Well, this is called household continuation planning, folks, 101. Without the new type of insurance, how do you pay a mortgage if you can't go to work? How do you make a car payment? How do you fund your retirement? I can tell you right now, I can pay off your business debts and your home debts the day you get sick. That's a big deal. Everything paid off and you're not in a box. I can protect 100% of your income 30 days from tonight. Every stinking penny that came in, if you got sick 30 days from tonight, we've got your entire, would you be upset if you had a heart attack and we brought your entire paycheck to you every month for the rest of your life? And if you did succumb to that illness or injury, would it be okay if we brought that income to your wife, your spouse, until she took her last breath? We get to guarantee in our household continuation plan, your retirement funds the day you get ill. And since that happens to over half the population before 65, and since most of you in the room don't save enough money, retirement insurance is very important. Wouldn't you all agree? That's a check. You know what's so crazy about that check? That's from the largest life insurance company in the world. That's a check paid out without having to die, but that check is made out to the person that bought the life insurance. That's a death claims check paid to the beneficiary, which happened to be the insured while he was breathing. He was 47, bought a term life policy for $389,000, and he suffered stomach cancer, and we released 89% of his death benefit up front, $344,000, while he was above ground. Why did all this happen? That's the picture of the late Dr. Marius Bernard. He died last November 2014. Dr. Bernard has been given the credit of creating critical illness insurance. Like him and his brother, they went out there, and Dr. Bernard and his brother did the very first human-to-human heart transplant surgery back in December of 1967. Today, Dr. Bernard has been given the total credit of changing the insurance industry. Today, if you want to borrow money in the United Kingdom, you cannot get a residential loan without owning this new type of insurance. And while this new insurance in America is stipulated for loans now, it doesn't represent hardly a tiny smidgen percentage of the insurance policies in force. Only 86,000 of these new policies were sold in the United States last year. 86,000 of these policies versus the 149 million in-force contracts in America. And this new type of insurance we have in all our contracts, whether it be term insurance or the state-of-the-art index universal life plan. Now, I'm going to go very quickly through our lending portal. We do lend money. We have the ability to do money lent from our 3,700 lenders. We do all kinds of loans. We do startups, working capital. We do installment loans, SBA lending, real estate, private cap, you name it, we do it. We've got from the biggest banks in the world to the smallest entities in the world. We're able to simply take a very simple questionnaire, input it on a computer, and literally within a handful of hours, you have 4, 5, 6 entities now bidding for your business, giving you a chance to do something. And our clients, they pay us no fees. But we do get paid commission from the banking entities for bringing a person to the table. When you got multiple banks bidding for your commercial loan, guess what? You can negotiate for the best terms. It is such a fast, quick process, and it works. And it's every kind of loan imaginable. For my attorneys, CPAs in the room, they have business clients in your file cabinets. If you work with us, with our lending portal, folks, you are now the biggest capital source in your backyard. 3,700. And you got to buy new equipment, finance equipment, get a doctor's office buyout, a franchise we bought, startup money, mezzanine financing, accounts receivable type things, commercial real estate, you name it. Every type of commercial loan done, and no one needs a license to do that. We know within a year we're going to be the largest commercial banking entity in the world. And by the way, this is the ones that built us this platform also built the platform for the SBDCs. They built the same exact platform for the entity of the federal government. Now, how strong is that? I find that to be stellar. So where do Americans save money? I mean, the whole point of all of this for me, folks, is to help you have 300% more income at retirement. To have you own a business to enhance your income is to get you in better shape to save more money, to take control of your lifestyle. And for those in your room that are making a decent amount of money, maybe we don't have to put you in a business. But you should be concerned about protecting your nest egg. You should want more income. And you know what's been a financial flop, even according to Time Magazine? The 401k failed. It was a lousy repository. It was one of the worst places in the world. It did not work. It was a disaster. And yet 53 million, that's where you have your retirement. What a disaster. You're taking your nest egg money, folks, your nest egg money, monies you're going to need next year or 5 years or 10 years down the road, and you're putting it at risk in the stock market? Really? You're taking monies you're going to need to derive income from, and you're taking, I don't know about that. The Wharton School of Business says you shouldn't do it. Harvard Law Business School says you shouldn't do that. And yet most Americans are listening to advisors, and you're taking on risk. And then the federal government did a study. Over the last decade, it's been a buffet of fees on you. The average household spends over $155,000 in fees. Are you kidding me? Who in their right mind would build a nest egg only to give up half to fees? And then you got the government with their hands out. They gave you a temporary tax deferment only to come back when you got older and want to tax you to death. We've had, in the last year, literally some of the highest increases in taxation known to man. They want to eliminate, on the death tax, not the inheritance tax, they want to eliminate the step-up basis. If your kids inherit your house, they want to go back to what you paid so that they pay taxes on what the house grew in value, so when it's finally sold again, they pay the tax on it. They want to raise capital gains to 28%. Income tax. Well, it's a country of $18 trillion in debt. So do I know what taxes are going to be? No, I don't. But the Congressional Budget Office stated something. They're not Dave Weiner. The Congressional Budget Office stated that if you're in a 10% tax bracket and things don't change with Social Security, Medicare, Medicaid, your tax bracket's going to 25. The current people on 25 can expect to go to 63, and the people at 34.9 can expect to go to 88%. Now, I don't know about you, but that scares me. But for business owners, we've got a book for you. The Power of Zero, how to get to a 0% tax bracket. Most of you in the room, this is how you do it. You get a deduction. You grow your money on a temporary tax deferral. When you take every penny out, you pay taxes. And when you die, whatever's left over goes to your heirs, completely taxable. It's time to stop the nightmare. The definition of insanity is doing the same thing over and over again, which you've been doing for 2 decades. It does not work. Give up the deduction. Grow the same way you grow an IRA or 401k. But get that puppy out income tax-free. Spend it tax-free. And leave it to whatever's left over to your heirs tax-free. You got a choice. Pay taxes on the crumbs that you put in, or pay taxes on the harvest. Which one do you think the government prefers you to pay taxes on? The seeds or the harvest? Which do you prefer? Now, if you had a choice of what line to have your savings on, There's two lines right there, folks. There's a red line to have your assets and a blue line. Everybody I talk to always tells me, well, Dave, I want the blue line. Yet 99% of people I visit with have their money on the red line. Now I'm going to bring up a calculator here. I'm going to do a little bit of teaching. I want to show you how competitive we are, because we are really amazing. And I'm just going to close out a few things here. I'm going to change my allocations, and you're going to see some new things here today. I'm just going to go strictly the S&P, and I'm going to not show the edge. For my insurance professionals in the room, when you see this today, you're going to sit down and you're going to say, like, wow, that's amazing. On the left side, your red line saver, here's the blue line saver. You've got choices, and as of January of this year, you've got 3 new choices. But right now, choice number 1, you can do it like you've been doing it, putting your money in harm's way. I'm giving everybody in the room, and I'm generous. I want everybody to have something really special. I want everybody to have $1 million. Now, I may ask for it back before I go home to the wife today, because she'd kind of be upset if I didn't bring the $1 million home. But I'm giving everybody $1 million, and we're going to look at, is it red line saver versus blue line? And you're going to tell me which side you prefer to be on. Last year, Clinton, you made 19%. Blue line saver only got 13. 2000, dot-com implosion, $1,195,000, I wrote it $1,074,000. Well, in my contract, we gave you a 0. You didn't lose nothing. 2001, had guys that decided to bring war to America. We had the 9/11 terrorist attack, so the markets just didn't deal with it well. That $1,074,000 fell $934,000. The blue line saver got a 0. Didn't lose nothing. 2002, Bush took us into a recession. Well, it happens. Recessions happen, and we fell to 715. But as a blue line saver, you got credited as 0. You're still sitting at $1,130,000. The markets went up 26.3, made 26% if your money was at risk. And in the old world, guess what? That's exactly what happened. You made money on that structure. It was a great thing. Our client only made 13%. By the time we got to 2008, the real estate stock market bubble, when Lehman Brothers went bankrupt, you went back down to 734. My client was sitting at $1,676,000. We then had 6 years of gains. 6 years of gains, and you're sitting at $1,674,000 after 16 years. My client's sitting at $3,039,000 because we gave them a contract that they would never be exposed to losses ever again. You were 82% ahead of your counterpart before we factored in fees and before we factored in taxes. When I put a 2.5% fee, which is about a point less than the 3.41% national average fee, I lose $429,000 to fees. When I factor in a 33% state and federal tax bracket, which I believe is low, I'm down to $830,000, and my rate of return, which was an actual rate of return of 3.28% for the last 16 years, I'm now at a negative 1.16. Whereas on the insurance contract, that's an index life contract, folks may never have heard of it. I have cost of insurance of $365,000, but I got no tax cost. I'm at $2,674,000 versus $830,000. Which would you rather have? Now I'm going to show you the edge. For my insurance people in the room, this is new, brand new. And you can only get it. It's exclusive. We built this. Our actuaries created it. People don't always want to be in the stock market. Some people want to be in real estate. I can appreciate that. Some people want to invest money in gold. For the first time in an insurance contract, we've got the Dow Jones Real Estate Index. And if I decided to change my allocation here, if I changed my allocation from the S&P all the way to just real estate the last 16 years, how would I look against the stock market? Well, I look pretty strong. I got a 1.5% fee, but I've got a guaranteed 100% no cap. Look at that, folks. That's $4.6 million at the end of the same time frame. And I get to take that money out without taxes. I still got insurance costs, But now I got a 16-year average per year rate of return of 9.45. I'm at $4,240,000 versus $830,000. But Dave, I don't want to be in real estate. I want to be in gold. Okay, let's be in gold the entire time. Gold with no taxes and no risk. Real estate with no taxes and no risk. This is the hottest product in the country, bar none. Nothing can beat it. With a variable loan feature at 4.5%. I can do blended. I can go in there and blend 45% stock market, 45% gold, 45%, 40%. I can do anything. I mean, I got all kinds of blendings. Pretty exciting as we go back into our presentation. Warren Buffett's got two basic rules about money. Rule number one, don't lose any money. If you forget rule number one, go to rule number two, which says don't forget rule number one. And I went through the calculator. So let's just show you a quick comparison. $500 a month, $6,000 a year going into the 401k, $6,000 a year going into the life insurance contract. You got a tax deduction on the left side, no tax deduction on the right side. At age 65, I got an $82,000 income. The $82,000 on the left side, you got to take taxes out, whatever your tax bracket is. On the right side, because I use non-deductible, no taxes. Let's face it. If you put $180,000 in your 401k over 30 years, you got $60,000 in refunds. Nothing wrong with that. That's beautiful. You had to use an after-tax dollar on the right side. But within 3 years, even in the 33% tax bracket, I got you back $75,000 that you would have paid in income tax. You're in stellar shape. And here's the problem. At age 72, on the left side, you're out of money. On the right side, my income goes all the way to age 120. And it's not because of how much money you put in. We put the same amount of money in both sides. We could put double the money on the left side with 100% matching funds, and you're still out of money before I am. You're out of money in 5, 6, or 7 years, even with matching funds. It's not because of how much went in. It's not even because of taxation. It factors in. Taxes and fees factor in, and you cannot compete. I can put money into an index life plan all day long. And what I did not do here today, I let them have the same rate of return. I didn't use a 3.28, which was the average the last 16 years. I didn't factor in risk. But when you're exposed to risk, taxes, and fees, you cannot beat me. At age 100, when it was 0 at 72, still 0. I got $2 million left after spending $2.8 million with a $2.1 million death benefit. Which side do you want to be on, the IUL side or the 401k side? John Bogle says, prepare for two declines of 25 to 30%, maybe 50%. He says, I went through one in 73, 74. I went through 2001, 2, and 3. I went through another one 2008 to 2009. They're scary, often terrifying, but it's typical. We've got 2 more coming. Don't leave your money in harm's way. Are you prepared to lose half of your nest egg right now? Tony Robbins just wrote a brand new book that says Invest Like the Wealthy, where you participate in market gains but are guaranteed to never lose when the market drops. You can save money the old way, banks. Hey, in the index life contract, I've got a bank option at 4.5%. You can do real estate the old way, buy real estate, goes up and down, or you can invest in a real estate index with me, the Dow Jones thing, and participate in the ups with no cap, minus a 1.5% fee, and get guaranteed a quarter point in the bad years, no losses, no exposure to disaster. You can go to the stock market, ups and downs, or be the S&P index, the 5 biggest companies in the S&P, get up to 13.5%, but when it goes down, get a quarter of 1%. You could play gold, the ups and downs, or get up to 14% year with a thing down a quarter percent. Over there, the taxes are either taxable or delayed. Over here, I got tax-free growth. I've got tax-free distribution. I got tax-free transfer of assets in all the marketplaces. You want to play? You want to go to the stock market, to real estate, to gold? You want to come in and out of those different things to go buy a house and sell it, to go buy some gold bars. Well, you got to pay a commission when you buy a house. You got to pay a commission when you sell a house. You got to pay a broker commission to buy the gold. Then you got to pay a commission to sell it. And the same thing applies to buying stocks. You got to pay a commission to go in and out. You don't have to inside my contract. You can do strategic translation from one market to another inside my contract with no taxes. You want to compare the last 20 years, how strong this product is? For the last 5 years, the S&P had a 15.45% gain. The Dow Jones averaged that real estate index 15.7, and gold lost. If you're in my contract, what did you make? Well, the S&P, you made 11.12 average with me. With real estate, you made 14.19 with no downside. And gold, you made 3%. The last 10 years, the S&P 767, Dow Jones Real Estate 705, metals 799. Guess what? My clients, because they avoided the losing seasons, made 9.24. If they were in the real estate deal, 13.84%, no loss years. Gold made 7.4. If we go back 15 years, you can see right there at the bottom, 4.24%, 11.68. Look at this. My clients, the last 15 years, made 7.76 in a market that averaged 4.24. Real estate, 15.87, and again, gold. In 20 years, 985.47705. We averaged 917, 15.05, and 6.81. Having this real estate index is amazing. It's the first no-cap index for life in the United States. So in conclusion, for our clients in the room, in the last few minutes we've talked about a lot of things today. We can get security. We can help you achieve more income. We can work with the assets you have, and we can increase your bottom line by not investing one dime more, give you 300% more income. That's a pretty big deal. For my partners in the room, we have a goal to build the largest insurance agency in the world. Well, for the insurance agent, we want to take a well-dressed, articulate agent. We want to provide you an office with one of our strategic partners and give you just a prestigious place to work. We have a goal that within the next 90 days, we'll have people being referred to you. In that model, seeing you produce from $50,000 a month of life premium, $1 million plus in annuity premium. Let's face it, you've got some nightmares as an insurance agent. Cold calling no longer works. I could tell you a million reasons why. It just doesn't. Why does telemarketing not work? Don't blame a do not call list. We just don't use phones anymore. We use smartphones. Why does direct mail not work? Well, I do business online. Do you? I bank online. I do everything online. Well, guess what? I don't pay attention to the mailbox anymore. Why is internet marketing so difficult to master? Well, in my industry, if you do a Google search for the word insurance, you get 18 million hits. None of us in this room today have enough money today to dominate that type of marketplace. And why do most life insurance professionals not have a nice plush office? The days of going to the kitchen table are over. Consumers do not want you to come to their home. In the last 7 years, we know what the statistics are. We know that 62% of the Americans have not had an insurance agent to the kitchen table in 7 years. That's not going to change. You have to change the way you do business. We have stellar goals. We're talking about taking your revenue to $86,000 a month once you engage. We want you to put back in every month 20 to 25% of your revenue back into advertising. I won't take you on if you don't do that. Now, some of you in the room here today, you're strategic partners. If you're a P&C agency, how would you like in your hometown to have 10 to 15 new clients a month? How would you like to have an insurance agent who's advertising for clients, bring those clients to you, and share revenue? Yes, share revenue on his life insurance and annuity sales that have nothing to do with your agency. He moves $200,000 of 401k money, and suddenly we gave you 10% of that annuity premium. He wrote $50,000 in life production. He parked off to your agency 10% of that life insurance premium. How would you like to have an extra $6,000 to $7,000 a month being a P&C agency? Well, you'd have to be licensed in our products, and you'd have to be willing to house that insurance agent. And here's the bonus. When someone does a startup or does a franchise in our model, doesn't do an insurance agency thing, well, guess what? He's going to use the lending portal, and it's going to require property and casualty insurance. Not only do you get to share in the life insurance revenue, but you're going to get brand new P&C premium just for housing my agent. So it doesn't have to be you, Mr. P&C agent. It could be my CPA in the room. If you're willing to learn the new way of doing business, the way Ed Slott taught us to do it, if you want to not promote IRAs and 401ks, not only do my startups need a CPA, but how would you like to be the person that houses my insurance agent in that town? Yes, you'd have to have a life license. Yes, you'd have to have a nice office in a prestigious location, but imagine having a specialist that could move 401k money and help your business clients get the right kind of business continuation planning. Your clients, they would split with you 50-50. They would be that specialist in your office. But Mr. CPA, they would be sharing from their advertising back with you. Imagine adding an extra $6,000 to $7,000 a month in revenue today for your office space. That's a trade-off I do every day of the week. And for my attorneys in the room, we make the same offer. I need an attorney in every major city across this country. Yes, you can get a life license and house my insurance agent. I would love my clients to come into an attorney's office rather than a P&C office. No pun intended, the P&C people in the room. But, you know, attorneys, the mahogany conference room, you house my life agent. You're talking about adding $6,000 to $7,000 a month of income being exposed. But now that you learned about business continuation planning, all those cases you did of all your past business owners, you get to go back to those people right now if you want. And guess what? You get to rebuild because they need the new type of continuation. They need new buy-sell agreements funded with the new type of insurance, which gives you a chance to be stellar. And for those attorneys that know other attorneys that specialize in business owners, this is your chance to introduce us to them. And if they get their life license to house my insurance professional, you'll get paid on that establishment also for bringing it to the table. We have such an innovative concept of floating management bonuses that my insurance professionals can bring insurance professionals to the room. And guess what, folks? You can give them the same contract and still get paid compensation for bringing someone to the table. You don't have to cut side deals or worry about someone cutting you out of a deal. We have the most innovative compensation plan in the world. For my attorneys, we're going to need you anyway. We need you for our startups and everything else that we physically do. But there's such a possibility of a partnership you never dreamt of. For those of you that could add $70,000 or $80,000 of income without once hitting your file cabinet, just for housing my guy in your town, that's a pretty big deal, isn't it? So whether you're a property and casualty agent, whether you're a life insurance professional here in the room, whether you're a CPA or attorney, we would like you to consider being a strategic partner with us. Join us in our growth. You'll need to get back with the person who invited you here today. But today was a very special day for each and every one of us. And for the consumers in the room today, we can help you. We can enhance your retirement like you've never had it enhanced. And if you need more revenue because you've been displaced, if you need a new opportunity in life, it's not potions and lotions. It's a career. It's really owning a legitimate business. I want to thank each and every one of you for being here today. It really was my privilege to be here and talk to you. Everyone, God bless, and we'll see you soon. Have a great day.